Zip Cyan is a interesting indicator. Uh, it, uh, it it doesn't have a signal. I'm thinking now with Zip Cyan lowest or Zip Cyan highest. It doesn't have a signal to start, or I guess in a way it does. For example, when it becomes the very first day, when it becomes lowest, that's the signal. But there's no other type of signal other than that. And then when Zip Cyan is no longer lowest or no longer highest, that's technically the day when that pattern ends, at least as a qualifying uptrend or a qualifying downtrend. That being said, it can continue to go on while it's under the other lines. It's just that you've got to watch different indicators to verify the pattern continuation. In this example here, I've got three vertical lines arranged. Again, I've got three daily charts with the price, the zip, and the swing chart on the middle in the middle chart, and then I've got the trend chart and the power chart on the left chart. The right chart is how the five subcharts appear as they would on the master platform. Now, in each of these examples, I've set up the line on the very first day that the Zip Cyan was lowest. In the pink line, we just have Zip Cyan sticking its nose out and becoming the lowest, and Zip Cyan is at 30 at this point. And the Cyan line has Zip Cyan lowest again, and it's at 35. And in this case here, Zip Cyan goes down next day, whereas in the other two cases, Zip Cyan goes up each day. Each of these three can easily be found just by setting a Zip Cyan lowest scan and running it every evening or every morning whenever you want to run it, and you'll be able to, just pick these off the list of the scan. And Zip Cyan lowest and Zip Cyan highest are pre-built indicators. You just plug them right into the scanner. There's over 400 indicators that we've made and designed for the scanner and the radar screen. I think the majority of them are for the scanner. But in any case, when Zip Cyan is lowest and going up, it ends up in an uptrend. The thing I'll point out here is on the yellow line, almost all of the lines, I think all of the lines at this point are above the 50 on the yellow vertical line. The same is true on the Cyan vertical line. All of the indicators are above 50. On the pink vertical line, the green is the only one that's under 50. As I look closer here, I just had to verify that. And also the Zip Cyan line is the highest of the three. So it's better if you can have the other lines above the 50. It doesn't necessarily need to be that, but you can see that the uptrend in the yellow vertical line and the Cyan vertical line was stronger than it was in the pink vertical line. And with the other thing too is, so you've picked up, let's say you've picked up all three of these at the bottom at a scan. You've identified them. The open is going to be in a half hour, and what do? Well, you know that you're going to watch the open under the candle theory. And if you understand the candle theory, a green candle, the vast majority of the time, opens, goes down a little bit, comes back up, creates the lower tail of the candle, continues up, maybe bouncing back and forth, but continues up in the body of the candle, goes up higher. By the end of the day, it comes back down and creates an upper tail of the candle. The red candle theory is just the opposite. It opens, goes up, goes through the body during the day, comes back up at the end of the day, and has a lower tail to it. Now, I've seen the upper tail and the lower tails created in the first 30 minutes. Or in other words, the high of the day was in the first 30 minutes of the day, of the trading period. And so I say end of day, but that's, that can vary. Now, the objective here is even though we see the Zip Cyan having gone down on the day after the open. So in other words, you're sitting there, you're waiting for the trade to open, or the stock market to open, and it gaps down fairly significantly. Now, with that gap down, because it went from, it closed at 140.34 and opened, oops, I got to move this up here, let me look, and it opened on the day after the Cyan vertical line at 139.05. So that difference is something that you need to. You don't need to identify with it, but you need to just recognize that when we closed here at 140.34 and we opened at 130.05. It causes the Zip Cyan line to go way down, and obviously after the entire day of trading, the Zip line still the Zip Cyan line still remained underneath the previous close, but we had a really nice green candle. So as soon as you see the open, it gaps down a buck or so, it goes down a little bit, and you can pick the bottom and start your track up, even though the line went down. Now that doesn't always happen. You have to deal with it in relation to how you're trading the open. When you spot a gap down like that, then it's easy. For me, it's easier to see that, especially if it opens up in a green candle format where it opens and goes down in a lower tail. Then the next day, that day, it's going to be up, and obviously should or could continue up, and in this case for 3 good solid trading days. The others are a little bit more sporadic. I'm just not going to, I just wanted to point these out to you. I will point out one thing here on the pink line. On the day after the pink line, we are in a red-green twin bottom, which is an indication for a green candle the next day. And the day after, and that next day gave us a green candle, but it was a T-top bottom green candle, or in other words, a candle with a real long upper tail. The following day, if we stayed in the trade on that day, we were looking to stay in one more. Because why? Because we're looking at the zip yellow and zip red. Zip red is under the 50 and down. Zip yellow is above the 50 and down. That's a classic definition of a red spike. And so the next day, this is going to go up. That's the definition of it. And so, and then by that point, on this following day here, we are green at 100. A lot of people are coming into the market. You can watch it, see what happens, get in, get out, however you feel. I'm sure there's signals where you could reasonably identify what you were doing. One of the big ones is the separation of price red and green with price blue. And with price red and green are both at 114 and price blue is at 47. So it's about a 60% difference between the 60-point count between the two, which tells you that separation. I mean, look at what you got here in these 10 or 12 days. You have red green real high above blue in the price chart, and that tells you you're basically in an uptrend. And you can obviously pick your decision each day as you go along here, but that separation is what identifies the uptrend. And obviously also in the price chart on this day right here is your first lower high, and that would be a good signal day to get out. And you definitely want to be out by this point, because on this point here you've had two lower highs, which tells you that, or should tell you that things are going down. And a lot of people would hang on to it, and what do those guys do? They gap it way up, and then you're fine at the end of the day, but it was a big gap up. And that's why a lot of people like to get out of the market overnight and then just pick the deals as soon as the stock opens up in the morning. Those are some key ideas or key examples of what the ZIP chart or ZIP Cyan lowest is about. That obviously was in Facebook, and this is one of the easy patterns to make money on. I mean, it's not rocket science, and it's amazing. A lot of people get in the habit of trading particular patterns, and this is one of the best. Have fun trading.